Hello there, and welcome back to another episode of TA with MK. My name is MK, and if you wonder why I haven't been posting any videos for the past 4 or 5 days or whatever it's been, I had my in-laws come into town. They live in a city about 8 or 9 hours away from where me and my wife live, and so her parents came into town to visit us for a few days, and I wanted to give them my attention, but of course that's when the charts decided to make their move. They just left early this morning, and of course I had a bunch of alerts going off last night and into this morning of Bitcoin taking its giant poo-poo. I was in a Bitcoin short. I didn't have very much money into it because it wasn't a trade I was able to monitor very close. So we had some decent, profits there. I also did close it a little too early. I wasn't expecting us to necessarily lose 25K without at least a small bounce, but we lost it pretty quick. So at any rate, we're going to discuss that price action in today's video, as well as what the SPX did, which of course led to the charge to the Bitcoin drop. And we're also going to look briefly at Bitcoin dominance. And if you guys are liking the content, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. Alright, now in the opening segment, I mentioned that the SPX basically led the charge as far as the Bitcoin dump went. Now that's not entirely true, but at the same time it is, just depending on how you look at it. And what I mean by that is that most of the damage by the time the SPX opened today on Monday in the US, which was at 9:30 a.m. Eastern time, most of the damage, in fact almost all of the damage had already been done, right? Meaning that you could look at it as if the SPX followed Bitcoin in that case. But really, if you could look back to last Thursday and Friday, there were already clues that we were having a breakdown, right? So this was Thursday, and this gap gets created by just basically from when the stocks close for the day, the futures trading, and when they open. And you can see that obviously all of the futures trading was to the downside. It created this gap that didn't get filled. That Friday it just dumped again. You can see what I'm talking about here. If I draw this, see these are the gaps I'm talking about. And it creates close Thursday, dump, opens Friday, just goes down again, closes Friday there. Closed on support, which I mentioned in my last video, and that I would be surprised to see a bounce, but things weren't looking great. We didn't even get that bounce, basically the way that the stock opened today. So the futures trading between the close on Friday and opening today left this big gap, and then today we just, dumped again. And so we are sitting now at a little bit more of what I would call, I wouldn't call it major support. I don't think we're at any level of major support for quite some time, but this is at least a little more significant support, where you had this bounce here, up, this bounce here and up. So we'll have to see what happens, in the after hours of the futures trading leading tomorrow to have a better idea or clues as to whether we're going to get a short-term bounce back up to maybe bearish retest this level up here, or are we just going to continue to plummet. All right, now this is the Bitcoin 4-hour chart, and this is a chart that I posted on in my group, on my Telegram group. I believe it would have been on Saturday at some point. We had just lost this major area of support because we had been kind of trading just within this range where we'd had this low where we'd seen a bounce, kept bouncing there. You had a wick below here. That's what's known as a bear trap. Really, this was kind of the top of the range up here for the most part, and all the stuff above it I would consider a bull trap. And just to kind of quickly go over that idea, we'll do bull trap, bear trap. All that really means, and I need to put out a video on this, but all it really means is anytime you have a major area of support, which was up here, right, and you see price action bouncing off that area repeatedly, but then you lose it, typically what you're looking for to short the market or short that coin at that point is a bearish retest of that previous support as resistance, and then you short it as it goes down. But if it's able to regain that level, right, then you can long it as it goes up. And then this, dip down here, or the wick, just becomes what's known as a bear trap. And the flip side of that, a bull trap would be, it's hitting resistance, it breaks it. A lot of traders are waiting to get in on that retest here, right, to long that coin. But if it loses that level it just broke and then bearish retests it, this is what's known as a bull trap. It traps everybody that tried to go long on the retest, and if you know what you're doing, you want to short the market at that point, right? Well, in group, we were just looking at the idea of a possible, bear trap to see if we wanted to long some coins. We had just lost the support. We were in the middle of heading up here towards the potential bearish retest, which, statistically that should be a bearish retest and you should see a bunch more downside, which we did. But I posted in the group, I said, you know, we were sitting right around here at about 28,300, and I told them, I said, I think we need to break back over 29K to consider this a bear trap. And the reason I said that is in a previous video on a weekly chart. In fact, let me see if I can find that real quick. Okay, so I did find that chart. So here's a Bitcoin weekly chart that's just on Binance. And on a previous video, I had stated that while we had visited below 29K several times in the past, we'd never closed a candle body below it. Ever since we'd broken above it in December, late December of 2020, right? We had used 29K as a bounce of support around to this area. Back that, you know, following year in late, you know, early and late May of 2021, we'd wicked down there once, you know, twice. We kind of wicked down to the 29K area or just above it several times, but then we eventually, you know, used it as support. But as you can see, even here on our recent dip, even when we went as low as like 26, almost between 26 and 27,000, just back in this year's early May, we still didn't close a body. What I mean by a body is, you know, just not the wick part. Everything as far as the candle bodies had all been closing above 29K support. And I had said in a previous video that when I expected there to be the bigger dump was if we closed a weekly candle below 29K. And that's exactly what had happened. Is on Sunday, you know, here in the United States, around 6 p.m. when the weekly candle closed, we closed part of this body, or well, we closed a lot of the body, obviously, below 29K. In fact, we were sitting at around, by the time it closed, the dump started to happen before the close, but by the time it closed, we were already sitting at about 26,700. We didn't even get, at least on the higher time frames, we didn't even get a bearish retest of 29K. It just basically led to this capitulation or this big, large dump. And, you know, and that was something we were prepared for. And I mentioned it in group. I said, this doesn't really look good. This is what we've been kind of talking about for weeks, is that if we lose 29K on a weekly closure, a daily would have even been bad, but we had actually had a daily closure, I believe, before. If we go look at it on the daily, I won't do that in this video, but as far as a weekly, that's obviously a more significant time frame, especially for institutions or bigger wells that are trading Bitcoin. And as soon as we lost 29K, that kind of set the alarms off, and, you know, down it went. And also, while we're on this chart, I will just point out that we've also discussed that at some point Bitcoin would likely come back and test these 200 moving averages on the weekly. And this yellow one, which is the 200 SMA or the 200 simple moving average, you can see it wick down insofar as testing it perfectly. That does not mean that will be the bottom, but that would just be an expected spot for you to see at least some sort of sideways action for a bit or a temporary relief bounce. Just because, you know, a lot of bots are trading based on these moving averages. Also, historically, Bitcoin tends to use those as support. However, on a weekly time frame, to see a giant wick below it, which would be this week, obviously, would not be surprising. In fact, our next major level of support, I would say, is around 19K, which was the 2017 blow off top. Obviously, we also broke above that at the beginning of this bull run in late November, early December of 2020, used it as support. So you kind of have, historically, it's just a key psychological level based on the blow off top of the previous bull run. Also, it led to this giant upside move in early 2021. So that'll be the next level to keep an eye on if we do get some sort of crazy Fed news that comes out this week. That's actually coming out on Wednesday, the next FOMC meeting and the results. And if, you know, that's hawkish, as they say, and the rate hike's going to again be 0.5 or 0.75, even something like that, you know, obviously that's going to move the markets, and that would most likely mean Bitcoin would lose, even if it has a temporary short-term bounce over the next 24 or even 48 hours. It wouldn't surprise me if we still do wick down at some point this week and retest, you know, some of these lower supports. Doesn't mean it has to happen this week, but it wouldn't surprise, is what I'm saying. You know, typically when you have all this much fear going on, it takes a little while for that to, you know, reverse. And I don't see anything on our near-term horizon that's going to reverse that. So these are what the levels we're keeping an eye on. Obviously, in the short term, if we did start to see, when I say short term, I mean over the next few days or possibly Wednesday or Thursday, if we do see a bigger pullback than we've already experienced, I would expect some sort of a bounce between 20 and 21K first, even if it's just short term, because there's going to be a lot of buyers waiting, especially 20K, just because that's a psychological even number. But the real support is actually at 19K. And that would be kind of, I would expect this weekly candle, even if we do get worse over time, you know, during this bear market, I would at least expect that to hold up at first, you know, and I could be wrong by that. Maybe we just plummet all the way down, but no matter how low I think we're going to go or that I have a plan for us to go, I would at least expect 19 to 20K range to hold up for a little while, just because there's going to be a lot of buying pressure at that level. And then real quick before I finish up the video, the only other thing I wanted to really quickly cover was the Bitcoin dominance chart. This is the 4-hour chart. Now I had the pattern previously drawn differently. We kind of had a rising channel followed by another rising channel. I've just kind of recreated the drawing a little bit to show it just as kind of one large rising wedge that we've been in basically since mid-May or so. And we did break to the downside. Now it's not a very valid pattern because on the bottom side especially, there's really only 1-2 touches. So I don't really like to trade anything without at least 3+ touches. So the pattern to me is not what matters, but in the short term, I guess it's good to see that it did break down. Basically what mattered to me more was the levels of support and resistance. And this 3-day resistance that we've, so we had this top trend line that we got rejected at once, twice, 3, 4. We had mentioned if this pattern broke to the upside, it could go parabolic, because anytime you see a pattern break the opposite direction that it should statistically, it tends to go parabolic that direction. I guess luckily for now, in the short term, once we hit this 3-day resistance up here, that acted as the final resistance. And for now, it looks like it's broken down and potentially bearish retested the bottom side of at least this trend line. But really, this blue area that I have marked as weekly support, if that holds up, all this is going to end up being is just a new range that this works in between, and it's not a great range to be in, right? We're still pretty high on our percentage. If we want to see anything good out of altcoins, obviously over the coming days and weeks, we need to see us lose this blue zone of, I guess now support, retest it as resistance, and then at least trend back down here. Ideally, it'd be nice if we go all the way back down here to like this 3-day support, back down here in the lower 44 percentile. That would be like a little miniature altcoin season. And that's something that can happen after Bitcoin's had capitulation every so often. If you look back at Bitcoin's history, sometimes it can have a big pullback like this, and then while it's consolidating or even trending slowly back up during a little relief rally, you might see the altcoins bounce kind of hard because they've been destroyed. So that's something we'll keep an eye out for. I'm not saying I expect that. A lot of it will be dependent on what the FOMC meeting comes out with and what traditional stocks do, because I ultimately think Bitcoin's just going to be drug around like a rag doll to what the SPX does. But if the SPX comes out, or let's just say it comes out with bad news, but a lot of that's already been priced in, and that's why we've had this dump over the past few days, last weekend for the SPX and today, and then of course just yesterday and today for Bitcoin, then maybe there's a chance that we do see something like that play out where we get a little altcoin relief rally. Even if it's only a few percent for Bitcoin dominance, that could lead to 15, 20, 30, 40% gains out of some of those smaller to mid-cap altcoins. So that's something that we'll be keeping an eye on. Remember to join my Telegram group with the link in the description so you can kind of see what we're looking at and what we're trading, more up to speed rather than waiting on a video to come out. And last but not least, I wanted to very quickly also mention that I did get my first order filled for my Bitcoin long-term accumulation plan. I'll put a link in the description as well for that video that I made, I believe, about 2 weeks ago or a week and a half ago, about the levels I was eyeing and my personal DCA strategy. And my high end, so basically I put out these are my target levels, right? And the first target level I had was around 22,650, which was the 3.82 retrace. You'll have to watch that video to kind of understand what I'm talking about, but I said I wanted to front run it at 23K. So today I had my order filled at 23,111, and that is 20% of the position, overall position that I plan to put into Bitcoin. Again, I'll put that link in the description, but you can see obviously I have other areas about 19K. I'm going to front run at 20, 16, front run at 17, and so on and so forth. But I want to quickly give an update on that, and I'll mention that more in tomorrow's video as well. But we did get our first order filled, and right now it's obviously right around where the price is. I don't necessarily expect that price to hold, but again, that's why you DCA. These are just levels I feel comfortable holding on to Bitcoin for the next couple of years, and I don't mind if we go down, because obviously you can see my plan involves me buying more at these lower levels. So I just want to give you guys that quick update. And that's going to do it all for today. Thank you for sticking around until the end. I hope everybody had a beautiful weekend, and I hope nobody's portfolios got too wrecked. Hopefully you were somewhat prepared for what was coming and either were in no positions, or maybe you were even in some short positions and made some money. If you guys are liking the content, please remember to like and subscribe, and we'll catch you tomorrow. It's T-A